Hey guys, what's up? Alec back with the daily stock market, and today we're going to be going over a few different stocks to be loading up on during the dip. We're going to go over Tesla and Amazon, what's going on with them. We're going to go over skills just hit a 52-week low. Make sure you stay to the end of the video because we're also going to be doing an earnings update, some stocks that are going to be reporting earnings later this week, and we're going to go over stocks that reported earnings today and earlier this week as well, because we had some big movers today, some stocks falling big and some stocks moving up big after hours as well. So drop a thumbs up on this video, make sure you're subscribed with post notifications on, and let's get right into it. So first up, we have Tesla down to $762 per share. I put a poll on my Instagram if you guys are buying Tesla right now or not, and 50% of people said they were, and about 50% of people said they weren't. So it's about 50-50 right now. We can see they're down 16% in the past week. So typically that will present some short-term opportunities for Tesla when you see them down big numbers like 16% in 1 week. All right. Now, if we pull out to a 3-month chart, we see they're down nearly 30% in the last 3 months. We can see that they're the lowest they've ever been in about the last 6 months. We can also see that forming a downward pattern right now. So if you break out the lines, you can kind of see that downward momentum oops, sorry about that. Let me refresh it. All right, so you can see that downward momentum that Tesla is currently having. It's following that support and resistance. Looks like right now it might be bouncing off the support and headed a little bit higher towards that resistance. So it could be a good short-term buying opportunity. There could be a bounce back above $800 per share. However, I think it's very risky to do that and time Tesla. It's always very difficult to time Tesla, especially. I think if we see them below 700 into the $600 range, and if we see them establishing new 52-week lows, that's when I'll definitely be loading up on Tesla. Right now, I only have $600 in them. We're down 20%. My average cost is right at $1,000. I don't have a large position currently in them. I'd probably be looking to put around $3,000 or more if they get to a 52-week low. All right, right around that $500, $600 mark. Now, in my opinion, that'll probably be the bottom. I doubt they'll go to the other resistance slash support of around $450. I think the lowest they'll probably go is around $600 to $580 per share. So if we see Tesla at those price points, I'm definitely going to be scooping up a few shares myself. Now, if we dive a little bit deeper, we can see the PE ratio is 167, which is sky high, but Tesla obviously has a bright future ahead of it, so that's why the multiples are being priced in so heavily. We can see the 52-week low is $1,200 per share. We can see the market cap is not even a $1 trillion market cap yet. Remember, Apple and Microsoft are above $2 trillion. Well, they were above $2 trillion when they're at their peaks. So if Tesla continues to fulfill all their goals that they've put out in the next 5 to 10 years, I'm sure we will see Tesla at a $2 to $3 trillion market cap in the future, especially as the autopilot taxi network becomes widely available in the US and Europe. Now, here I found an article that was saying that Ford is a better investment for the next 5 to 10 years over Tesla. And some of the reasons here we see Ford is executing an autonomous vehicle roadmap that places it above the front of the pack. The autonomous robotaxi rental and delivery markets are extraordinary growth opportunities. So whoever is the leader basically of the robotaxi rental and delivery markets is going to, have huge market caps in the future. And that's a company you really want to be invested in for the long term. The Ford strategy is superior to that of Tesla, placing Tesla $1 trillion valuation and Ford's $72 billion valuation in the spotlight. So Tesla is about 10 times larger than Ford's market cap at a mere 8.5 times 22 consensus earnings estimates compared to Tesla at 89 times. Wow. So you can see that the multiples that Tesla's trading at compared to the multiples that Ford's trading at, almost 10 times. Ford is trading at an incredible discount given the strategic direction and more resilient marketing position. Ford's broad product mix of trucks, SUVs compared to Tesla's reliance on electric-only sedans create a more resilient business model that will be well aligned, entrenched automotive trends over the years. Ford is a top auto choice throughout 2025 with a high probability of outperforming Tesla. We'll also see Tesla is dropped by 30% from its peak, yet it's still trading at a PE ratio of 150 and a 255 multiple FCF, which are very lofty valuations. Tesla isn't a technology company, as once again, 100% of its gross profits and net income were generated from its automotive segment. Tesla's margins were significantly lower than software and technology companies, and compared to Volkswagen, they just seem good for an automobile company. I have nothing but admiration for Elon Musk, as he's done something a handful of humans could achieve. Musk decided to allocate his time and resources to take the automobile industry and make the shift to electric. When you think about the barrier of entry, there might not have been a tougher industry to break through at, in the starting grounds up. Ford, General Motors, Toyota, Honda dominated the US car market for a while and have tremendous amount of infrastructure and spending capacity in place. Tesla's first car model was the Roadster sports car, debuted in 2009 and followed by the Model S in 2012. Tesla spent $300 million in 2012 on cost of revenue and $400 million on operating expense, to Ford's spending $100 billion on costs and revenues and $9 billion on operating expense. And if we look at what analysts have to say, they have a very, very skewed judgment. The analysts cannot agree on Tesla stock. Here we see some analysts have them at $300 per share. Some analysts have them at $1,500 per share in the next 12 months. But on average, they have them about $1,000 per share in the next 12 months, which I can definitely agree with that sentiment and statement. 43% upside potential in the next 12 months. And if we see them closer to $500 per share, $600 per share, there'll obviously be more upside too. And obviously you have all the top analysts reiterating their price points and their price targets for Tesla. It's one of the most sought after stocks in the whole stock market, Tesla stock. So you have some really top analysts all saying, and most of the 5-star analysts, you can see 1,300, 1,300, 1,300, 1,000, 1,200. Top 25 analysts doing an 1,100. We really only see one analyst giving a $300 price point in the next 12 months. So overall, I think Tesla's a great cornerstone of any portfolio. However, you don't want to have too much of your portfolio diversity in Tesla just because it's so risky. Obviously, the lower it goes, the more attractive it's going to be getting. And I want to get in under $600 per share and build up a beefy position of around $3,000 to $5,000 in Tesla. Okay, so the next one we're talking about is Amazon. All right, comment below if you'd rather buy Amazon or Tesla at the current valuation. Personally, at the current valuation, I would probably want to buy Amazon. Here you can see they're $2,800 per share. They fell 3.5% today, and they're down nearly 9% in the last week. Okay, in the last 3 months, Amazon's been hit 18%, and this is a stock that doesn't get hit too often. You can also see in the last 2 years, Amazon really hasn't done anything, right? It's basically flat in the last 2 years, and every time that happens, look what happened in the past. If we go 2 more years back, what happens after you see Amazon staying stagnant for about 2 years, not making much moves, you see a big run up in a short amount of time. So we can definitely see something like that happen again. And if you go back even further, you saw Amazon being stagnant for about 2 years again in this time frame right here. And then we saw a big run up on Amazon once again. So that's kind of the history of Amazon, what we've been seeing in the past, those 2 years consolidations and then a big spike happening. So I wouldn't be surprised if we see that again and we see Amazon going to like $4,000 per share, $5,000 per share. Amazon is also one that's probably going to be announcing a split. There's no proof or guarantee that Amazon will be announcing a split, but I think it's just bound to happen. I think that's going to be building a lot of positive momentum behind the stock once they announce that split. You'll also see my position around a half of a share, $1,700. You can see my average cost, $3,300. We're down 12%. And how we built this position, we're just averaging in $10 per day for the long term. I don't plan on touching my Amazon shares for at least 2 years minimum. So I think they'll be a lot higher than they are today. You'll also see the PE ratio is not nearly as high as Tesla is. It's about 1/3 of the PE ratio, implying it's a better deal. The market cap 1.4, but that's deserved because it is one of the biggest companies, obviously, in the world. And I think that it will continue to be one of the largest companies in the world. And it could probably even take out Apple and Microsoft for the largest company in the world as well. Here we'll see a summary on Amazon is the leader in e-commerce and its footprint is still expanding. So that's why I think Amazon's going to be a safe bet for the next 5 to 10 years. They're going to be staying dominant in the e-commerce space. I think the e-commerce space is going to keep expanding for the next 5 to 10 years, and Amazon will continue to be a leader. Their AWS segment is also a leader in the cloud infrastructure service, which is a huge growing sector. And I expect most of their profit will come from this high margin segment. The acquisition of MGM Studios will bulk up the video streaming service to also boost growth in Amazon Prime membership. So remember, they also have an Amazon Prime membership. They're basically an index fund at this point. They have so many things going on. All right. Investment thesis: Amazon is an e-commerce giant and a cloud service company. They sell merchandise and content from third-party vendors through their distribution network and also generate revenue from cloud-related services, storage, data analytics, machine learning, and etc. Additionally, Amazon Prime services offer free shipping and digital content subscriptions. Riding the tech boom of the 2000s, they have been one of the most valuable companies of this entire era. The ongoing volatility related to Omicron variant, inflation, rate hikes, and geopolitical instability has created an opportunity to buy Amazon stock at a slight discount to its intrinsic value. I believe Amazon presents a great buying opportunity for long-term investors. You'll also see Amazon reported solid earnings results this past quarter, and their highest margin segment, AWS, grew significantly. Their revenue has also been amazing. The last 5 years, on average, 29% growth year over year, and I expect the impressive growth to continue through AWS and new additions like MGM Studios and so on. They are fundamentally sound. They have a solid balance sheet with plenty of cash and great operating cash flow. Solid earning results. Amazon also reported Q4 earnings results a couple weeks ago, and they beat the EPS estimations handily. You'll actually see they beat it huge. If you guys remember, they had $5 of EPS versus $3 of the estimations. Net sales grew 22% year over year and reported a huge gain from their investment in EV company Rivian. If you guys remember that too, I made a video about that. Their profits mainly came from Rivian. Additionally, for the first time, they disclosed disaggregated results on advertising revenue, and the segment grew 32% year over year to reach $9.7 billion in revenue. Overall, rock solid earnings report filed with great developments. And here you can kind of see some depictions of their revenue gains, their year over year growth, their net sales, and so on. Very similar to Tesla, we see a 45% upside. However, there's less risk with this one. We don't have any analysts putting them at like $300 per share in the next 12 months. Most analysts agree that in the next 12 months, they're going to be above $4,200 per share. And some analysts, some even 5-star analysts, have them as high as $5,000 per share in the next 12 months. Remember, the last 2 years, what we were going over in the beginning of Amazon, it's been stagnant for the last 2 years. So the next 12 months could be the time that Amazon really picks it up. And the lowest estimates is 3,600 that any analyst has in the next 12 months. You can see a lot of these analysts just reiterated these remarks, and a lot of them are 5-star analysts as well. So overall, I think Amazon is a great cornerstone in any long-term investor's portfolio. You really want to be holding this one for 12 to 24 months minimum. And if you're smart, you'll probably hold it for 5 to 10 years and just won't touch it. This is a good one to put in your Roth IRA account. And I might even buy a full share if we see them go as low as like 21 or even like $2,300 per share. It could get extremely interesting, especially if you're buying a whole share to hold for 5 years. Now, whenever I say that, like buy a whole share to hold for 5 years, I have sometimes people message me after holding for like 2 to 3 weeks, and they're like, hey man, are you still holding that stock? And I'm like, yeah, of course. I said that I plan on holding it for 2 years, not 2 weeks. So that's the thing too. You have to have a long-term mindset. It's very hard. It's extremely difficult to predict where the stock market's going to be going in the next 2 weeks or 2 months. It's a lot easier to predict where it's going to be going over the next 12 to 24 months, especially when you've been in the stock market for a while. However, this stock market is extremely unpredictable. Now, we'll see that Fubo TV was up 8.4% after hours. And then look what happened. There's so much manipulation going on in this market. It went up 8.4% after hours. And then about 10 minutes later, it drops 14% after hours and finishes off the day 4.8%. All right, so it'd be interesting to dive into their earnings and see their EPS, their guidance, and their revenue. And those are typically the 3 things to look at when you're looking at earnings. You typically want to look at the EPS first, the revenue growth second, and then the guidance third. And those 3 things will probably tell you why the stock dropped big or it's up big. Now we see Skills down to $2.70 after hours. All right, we see them down 25% after hours, which is absolutely unbelievable. This is now almost a penny stock, and it's just getting lower and lower. So comment below if you want to see a video, a deep dive on Skills and Fubo, and see if we should be buying the dip on some of those ones. We also see Lemonade getting dominated today, down 16% after hours. It's just absolutely ridiculous with Lemonade. We see them down nearly 85% in the last year now. We also had eBay, Clover, Hertz all report earnings after hours today. Tomorrow before open, we're going to have a big one. We have Alibaba, which is going to be a super interesting one. Moderna, Nikola, Norwegian, Six Flags. So if you're an options trader, there's definitely some money to be made. It's extremely risky because nobody really knows if Alibaba or Moderna are going to be going up or down. But Norwegian, for example, there's a good chance that they could be going down and missing on revenues because of the whole travel issue going on with the Omicron and everything too. Now, after close, we have Block, we have Coinbase and Etsy, Beyond Meat, Open Door, Rocket Mortgage, and Carvana, which are going to be all super, super interesting ones. Coinbase is going to be a super interesting one. If they dip 10 to 15% tomorrow, I'll definitely be loading up some Coinbase. Etsy, I think, has a good chance to beat earnings. There's no guarantee, though. If Etsy does drop 10, 15% tomorrow, I'll definitely be loading up on some Etsy. I think Beyond Meat has a good chance of losing or missing earnings. All right. So there's no obviously guarantee on that, but there's probably a good chance. And if you want to do some more research before you take out an option, you can type in something like Beyond Meat earnings preview, for example. And there's really good articles on Google. I recommend at least reading 3 articles before taking out any option contracts before earnings are announced. Okay. And even if all your theses come true, and let's say that Beyond Meat misses earnings horribly, revenue's down, guidance is down, there's always still a chance that it can go up, even if they miss dramatically, or vice versa. If they do really good on earnings and beat their EPS, beat their revenue, beat their guidance, their stock price can still go down. So that's why it's always very risky to play earnings. It's very risky to be on the offensive side of earnings. But the defensive side is a lot more safe. For example, if Etsy or Coinbase falls 15, 10%, the defensive side would be picking up some shares and buying the dip. On Friday before open, we have Foot Locker reporting and LendingTree, which are 2 big companies. I used to be an investor in Foot Locker, made a pretty penny on them, about 40% returns. Haven't really looked at the stock lately, but if they drop big and get it to attractive valuation, I'll definitely be considering them. Now, going back to Thursday, Rocket is also an interesting company that I'll probably be wanting to load up on a little bit more as well. So I hope you guys really did appreciate that video. I do my best to come on here every day and keep you guys updated with what's going on in the market. You know, the markets could be really hard right now, so I hope that these videos are a breath of fresh air, kind of giving you a long-term mindset on the stock market and taking time out of my day to go over all my thoughts on the stock market with you guys. Some stocks that I think are good value. We went over price points, best places to buy in these stocks, and we also went over some earnings too. So if you appreciate that, all I ask for is a thumbs up on this video. It really helps me out. Subscribe with post notifications on and share with a friend if you think that they'll find some value in this video. Also, the daily cryptocurrency is my only other Instagram. So if you want daily updates on cryptocurrency, just like I do with the stock market, make sure you guys follow me over there. And until next time, I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.